So gang, as we get started here, let's take a look at the 1000 tick chart. I've got the DSR levels applied, and we want to focus in on a couple of key price points. Man, crude oil popped big time yesterday. As we started yesterday's session in crude oil, we took a look at the potential. We drove to new structure lows, and we were talking about if they take out these swing lows, then where are they headed? So you'll note right here we had a projection at the 1414 Fibonacci extension. Instead, we rallied, and we rallied in a big way. So I would use the same exact leg, only I invert my Fibonacci analysis. So I go here to here. We'd start at the bottom, left click at the top, and pull it back down, and project 127, rally to that 127 of the inverted leg. And then there we went to the 1618. Now these were basically the highs of the day session right here. This is 2 o'clock. You can see in the Globex session we did make new recent highs as we rallied back to the 93.67s. Okay, so right here as this market rallied back, I took the short here. I got partial profits on 2, stopped out on the balance right here as we rallied to new highs. I sold them again here. Partial profits as we pulled back here, stopped out on the new highs. And then after we made the new structure highs higher close, you'll see here the big Mo goes bullish. And then first time back right here, there's the turning point black tip buy signal. Now this came in right here at 1121. So now this was the first buy with trend. So we've talked a little bit about the turning point black tip. I'll go into more training on that in upcoming sessions. Here is a turning point black tip sell. It's a cluster 2. So when these guys cluster back to back, we go turning point followed immediately by the black tip. And you can look left, see that we're at a DSR level, and we're in a bear continuation pattern. So we've got black big Mo, bearish. We want to be sellers. Look left, we've got structure relevance at a DSR level. That's a beautiful sell signal. Right there was the first turning point black tip cluster 3 buy on the way back up. So from that entry right there at around 91.87s, immediately popped to retest the previous highs at 234 for about 50 ticks, and then obviously continued the rally. And you can see once we broke above our FibDots right here, bars go to bullish white. We never came back down to our 2618 until after the close right here at 7:30 last night Central. So great example. Let's tighten the chart down. What does a bear continuation pattern look like? You can see right here this entire move down started with a turning point black tip sell signal. So that's a cluster 3 at a DSR level sell. We terminated that directional move on a V bottom. So literally it's just a hit and run type of trade. Most of the time markets turn at double tops and triple tops, but we do see these V bottoms. So there's an example, V bottom, impulse rallied all the way back to the previous structure resistance DSR level. So at our DSR we had a buy right here for a winner, counter trend. Sell right here, winner with trend. Buy right here, stopped as the market rolls lower. Now we looked at this yesterday and we did have a 18 tick target available there on our lower trading time frame. Okay, so basically on the 1000 tick right here we're 2 for 3, 65% accurate. Then we rally back right here. We have a sell at the DSR, scalper hit, balance out on the trail stop. So basically that's a break-even trade. We go plus 18 and then minus 16 to 18. Then here's the buy with trend. And now here we've got overbought bearish divergence at that DSR level. We broke above, closed above, and now you can see we're kind of in a sideways trade right here. So we've got structure at 360s. We've got structure right here at 260. So we got about a $1 range. And we're rallying right now to go fill that gap. All right, so let's do this. Let's go crude oil. Let's go down and let's take a look at gold real quickly. Left click the F. Gold, beautiful example of a bear continuation pattern. So I sent out the video yesterday of that partial DST training. Okay? As we're rolling lower, this is a great example. And again, you see the volatility. So I want to start your visual over here on the left-hand side. Here's the swing high that preceded the decline to this new structure low. Market pops, we go outside return. There's a lower high at the 618 retracement. This swing high precedes the decline to that new structure low. The rally right here stops 618, 786 retracement. This swing high precedes the decline to this new structure low. Market pops back up 618, 786 retracement. That's the exact pattern that we were watching for yesterday in crude oil. So you see 3 consecutive decline, rally, sell them, decline, rally, sell them, decline, rally, sell them. You see Fibonacci relevance on each of these. So let's take the last one right here. This swing high preceded the decline to that new structure low. And again, we rally back 618, 786, and we rolled over. Now here you can see we have not moved down to test that previous swing low at around 1233s. Let's expand the chart. Bear continuation pattern. And you can see at these swing highs, again, note the tendencies. That's what we'll talk about in Strat Labs as we move forward. When I get a turning point followed immediately by a black tip, or what we call the 2-bar cluster, when the turning point black tip cluster, 2 bars or basically back-to-back candles, then that's a pretty solid turning point, especially on these higher time frames. The black Big Mo right here tells us we're in a bear continuation pattern, and obviously your basic DST, here's your new structure low. We anticipate the lower high. So right now, what would be the expectation? Well, either break above the swing highs and a possible rally here, retest of the low, new structure lows, and we'd anticipate a move right down to the 1229 handle. We've got a 127, or actually a 1618 extension right here from the last leg, 1229, and then we've got a 127 extension of this last move down at 1230. So 1 point separates those two. All right, let's right click on this dude. Let's get rid of the drawing tools. All right, now let's go TF. We'll go ahead and roll forward now. Contracts have rolled. We're in December. So we'll go to 1214. Gold's already in the December contract. Remember yesterday we talked about typically switching at around lunchtime. So volatility right here during the rollover, the December contract. This is the update. So we've got a move right back into our DSR resistance zone. So again, higher time frame 1,000 tick. The DSR level sets itself off of this swing high. So here's the first retest of that level. Again, do we have an extreme overbought? Yes. That's where you start your analysis. If we go extreme overbought, then SOS 1. Next question you ask, where's my market relative to? I want to look for a DSR level first, and then I want to look for relevant market structure. The DSR level is there. That adds strength of signal too. We have a symmetrical double top right here, structure resistance, SOS 3. We go turning point, but then about 5 bars later, we finally get our black tip sell. From the short entries right there, approximately 1168.50s. We make an immediate move lower, 9 points. Okay? Yeah, exactly. So as we roll back up here, again, opportunity to buy IWM puts. And when I say that this is low risk, what we're looking at here is on the short entries, we'd only have to risk to about 72.10. If this market pops, trades above, closes above, then we're going to go retest this DSR level higher. But if let's just say we're selling 69, stops at 72, we're risking 300. My first expected target would be back to 61. So that's 8 points of opportunity. My secondary target would be down to 50, which produces 18 points, 19 points of opportunity. Okay, so again, it's a beautiful risk-reward ratio. Now, the one thing obviously is that it would take patience. It's unlikely that we would see this market move all the way back down here in one day. What's more likely is that would be a swing trade. So the distance between DSR resistance and DSR support is greater than the daily average true range for this market. Okay, so mini Russell right at a key price point right here. Watch for intraday short entries, 68s to 70s, anywhere in that 2-point window. If I'm a swing trader right here, stops at 72.20. Now again, the downside is obviously it's a Friday, so you want to be considerate of the overnight hold, which would be a weekend hold, and typically your margin requirement holding overnight is going to triple. So if you can trade the mini Russell right now with 1,000 or 1,500 a contract, it's likely to go to 3,000 to 4,500 if you try to hold it overnight. Your broker will have your margin requirements. ES 12.14, S&P 500 December contract. Okay, S&P popped right here to the 92. Let's tighten the chart up. Again, look left. Symmetrical double top, gang, on the left-hand side. Our DSR level sets at 91.92s. Okay, we've got structure support right down here at 75. My DSR level is coming in off of that swing low right there. So we got a 1-point window down here. So if I'm a seller, a 91.92 handle right here, then, again, counter trend, initial targets would be back into the 78s, extended down to the 74 handle right here. Okay, so again, we tested late last night, hit it again early this morning, no qualified signal right here for the swing play. I'm already short based on, we bought spider puts for protection. Yeah, and basically those are down a little bit, basically back to break even. Let's take a look at our Dow Jones, YM 12.14. Okay, so diamonds, or the Dow Jones right here, again, very, very solid, and we're hanging out in the middle of this zone. So if this is my DSR resistance, I want to be a seller at or near 17,000. I love that big round number as well. You see price has been rejected here once, twice, 3 times a lady. If I'm a buyer, I want to look for the 16,890s, 16,900s. Right now we're literally almost right at the 50% retracement of that zone. So I call this, on this time frame, this would be no man's land. Okay, so when we're hanging out in no man's land right here, I really don't get that excited about a swing trade. Again, this is the 1,000 tick. We might see that we have qualified signals intraday on a trading time frame. Okay, so there's the DSR setups, 1,000 tick chart across the board. Key price points on each of those primary markets. All right, now crude oil right here, gang, top middle. We just rallied up to and almost attained the gap trade. Okay, so from the open, here was our 8 a.m. open right here. Notice the open versus the go trade. So this is where the gap would fill. So if I'm trading for the gap fill, I want to be a buyer here, looking for the market to fill 90% of the value of the gap. So let's just use a 92.88 as an open right here to the gap fill 93.21. So 88 plus 12 is 93.21 is 33 cents. 90% of that's approximately 27. Okay. So basically we've filled the gap. If the market were to rally back into this 93.21 handle, then I'd look for short entries. My resistance and support levels are still holding. So I like the sell signals 93.15 to 21, again with a qualified signal. And then number 2, you see that bid zone 1 right here is already set at 92.65, and it happens to be correlated with our Globex lows. These lows came in at 750. So I bought them right here. I did a stop and reverse for a loss here, and then made money right here. So I'm up a little bit so far on crude oil. Nothing big, literally like 40 or 60 bucks. I got the level 2 strategies running in the background. We'll talk time of day, day of week analysis. So on my level 2 strategy right here, this guy performs best trading about 2 hours a day and typically Tuesday, Wednesday, Thursday. And it's been consistent like that for the most recent 12 months. Okay, so typically Mondays and Fridays will be more sideways, directionless type of markets, lower volume. We just look at the historical analysis there and we can see what the performance has been like. Yeah, let me take a look at a couple of other things over here real quickly. TF, yeah, let me roll these to 1214, top left. And bottom left, let's take this to the December contract. Now, when I make this modification, the strategy still set up. So you see the strategy right here. We had a black tip buy signal, 8:31 this morning in the mini Russell. It hit target 1. We'll come in and make some modifications to the strategy. S&P, let's go 1214. Dow Jones 1214, and let's take our NASDAQ to the DEES contract as well. All right. Yeah, and those of you that are using NinjaTrader, so right here is my control center. So in order to add this, I just go to Tools, Instrument Manager. You can put it in the default series right here, or I can build a new list. Okay, so right here you'll note I've got a future September 14. I've got a basic futures, so I can drop it in one of these two, or I can put it in the default. Come over here, type in NQ, hit the drop-down menu right here, go to Futures, left-click Search. It finds the NASDAQ, which is the E-mini NASDAQ 100 futures contract, tick size 25 cents or a quarter tick per point, point value, so it's $5 a tick, $20 a point. Note right here that the exchange is the Globex exchange, and the expiry is the 12/14 or December contract. Left-click right there to move it over. Go to ES, left-click Search, go here, left-click to add. TF, thank God it's Friday, TF, TGF, go here, New York Board of Trade, left-click. Already exists. I'm good there. Let's go grab our Dow Jones, YM, search, left-click. Let's add the December 14th. Already exists. Let's go 6E, futures contract for the euro currency. Already exists. Aha, must select an exchange. So we'll go with the Globex. Good. All right, so we're covered across the board. Now I should be able to update that. All right, crude oil down here. Again, bid zone 1. Let's watch for a double bottom right here. Okay, so look left. Right there is a symmetrical double bottom. We've just pulled back down into this price point. I'll do a 2-lot with the momentum setup. We'll look for the retest. Now again, if I add the RSI, this is the base DST that we looked at yesterday, relative strength index, the RSI is oversold on the left side, right here, buried. Now we look for a retest of the bid zone 1, possibly lower lows with bullish divergence. Yeah, the more conservative trade would be to wait for price to close above the vol band right here, and that's going to paint the bars white like you see right here. So I do have it set up automated where it's literally just a stop and reverse. So we basically buy white, cover partial on the way up, and then stay long until we sell black. Cover partial on the way down, and then stay short until we reverse and buy white again. Again, this type of market conditions perfect. Right here, I bought them. We go bearish right here, I sold them, and then had this nice winner right here. So here's the counter trend double bottom. As we build our strength of signal, RSI is oversold. So that's the first thing that you see. Is RSI oversold? Yes, then make that an SOS1. Next question, where's the market relative to? I'm at my bid zone 1. This is an SOS2. Look left, I'm at structure. That's SOS3. Now I'm retesting my bid zone. The double bottom is a visual price pattern. So now let's see if it goes white. Yeah, and what I'll do is I'll double down and I'll show you an adverse excursion. So this is the more conservative entry. I'm going to wait for the white candle. I get in later than had I bought them at 66. You see that that's 10 cents worse. I'm going to pull my target down to 89 using my number rounding strategy right there. Okay, now, if the market pulls down, I want you to see these tendencies right here, gang. So note right here that we go white candles, I'm still bullish. I'm going to add to the position right here. That's an adverse excursion add-on. If we trade below, close below, the candles will go back to black. And then we'll see if we make a move down here to bid zone 2. Okay, so look at the difference in the entries. If I bought them at 66, counter trend, then you see that this pop right there produced almost target 1. We went 15 ticks in my favor. Okay, waiting for the bull reversal right here, the white, this is the pullback inside of the volatility bands. Okay, so take a look at tendencies. We drove to a new high here. We pulled back all the way back down to the blue FibDot volatility band. Then we rallied to new structure highs. Note right here, as soon as we close below and the bars go black, we rally here before we roll back over. So it's pretty common that after we get the break above, close above, which produces the white bars, that we at least get some reprise right here and an opportunity to get in. Obviously, we do get those big momentum moves that just take off. So you see here, we go black to white. That's a color rotation. We pull back right here. We could have entered at the same price as if we buy market. We go bear rotation, white bars to black bars. We could have entered at a better price here. So by using the adverse excursion, we get the best of both worlds. If I wait and buy the reversal right here, I buy the bull color reversal, then I will participate in every one of these moves that takes off and goes straight north. If I buy here and then I add at a better price lower, I get a better average price for my entry, and then I can cover partial on the way up and then let the balance run. So if we take a look at our position sizing right here, this is a bull color rotation. This is based on the FibDots, which is a volatility indicator based on ATR. Okay, so a bull color rotation is when my candles go from black, some of you use red, to blue or white. So the type of entry, after I see this, I can buy next bar market. And next week we'll talk about this in Strat Labs about the difference between a qualified setup and a qualified signal. So here we're up 9 ticks, 10 ticks. Again, we got an average price, so I'm going to pull down. We'll cover 3 for 9 ticks. So there's $270. I did +2 and then added 2 for a 4 contract position size. The next thing I want you to note is right here, gang, the blue FibDots. So I'm going to trail my stop. I can go at the value of the fibs minus 5, 6, 7 ticks. And then obviously if we get a reversal, if we're just trading our bull to bear reversals, then I wait for the candles to go black and I would reverse my position. All right, so the signal, very simply, is bull color rotation. That's caused by the FibDots. And we'll either go from black or red to blue or white. Here, for me, visually, black is bearish, white is bullish. Very, very simple. My FibDots right here, kind of like an SAR, some of you have seen that. They're going to trail based on volatility. Stops come to 69. Now, again, if we look over here, if I buy next bar market, I would have been long from 83. If I go plus 15, I need to see 99s. Right there, my target 1 is filled. And then I would have stopped out of the long entry and reversed to a short entry right here at around 93.02s. From the short signal here at 02, the highest high is 13. So my 18 to 20 tick stop easily holds. Price does not rally above the red FibDots here. And then obviously from the short entry, the plus 15 easily hit. And then the balance out here on a stop and reverse. Now we can get more detailed, I guess you could say. And we could use position sizing based on whether it's with trend or counter trend. Exactly. So for example, we had a trader just ask, if I'm a seller up here, so I'm rallying, I get my turning point black tip, and I'm selling and my master mo is black. Maybe when I'm a trend trader and I trade with trend, in other words, I'm selling in a down move, maybe I trade 2 contracts here, and then maybe if I'm counter trend, like we were right here, maybe I only trade a 1 lot right here. Okay, now look, we've got a black tip setting up right there. So this is with trend. Now if I wait for the bar to close below, I'm going to left click reverse, and then we can look to add to that. So there's my black tip sell. There's the close below, so we'll reverse. Okay, so that's a color rotation. I'm selling with the underlying trend of the market. 72 to 57 is 15 ticks. Note here that my protective stops are separate, so I can modify my stops on each one. Okay, so I can pull my stop on my scalper down more aggressively, and I can leave room on the other part of the position. All right, so let's pull this down. So for example, here's a turning point black tip sell with a black big mo. This is selling with trend. Here is a buy signal down here, bid zone 1, previous structure, oversold bullish divergence right here. So this is counter trend. This is a sell again with trend. Yeah, and you can just modify your position size accordingly. And you don't always have to use the ATM strategy. You can do it easily without the ATM. The only thing, obviously, the benefit of the ATM is that we can use trail stops. And I love the fact that, especially if we're trading multiple markets, we can use that one cancels other. So for example, now we can leave this chart. I can completely move my attention to another market, and I know that if my stop gets hit, my target's automatically canceled. I know if my target gets hit, my stop is automatically canceled. So this is now out of sight, out of mind. Okay, so real quickly, let's come back over here. Let's take a look at the S&P. So the S&P, no real gap. We opened basically near yesterday's close. There's crude oil. Our target 1 is attained. Okay, so if target 1 is hit, then we trail stops on the balance. Okay, so we sold them with trend right here, traded a 2 lot. You can see the value of the FibDots is plotting right here, 92.67. So we're now going to trail our stops. I'm going to go to 73, 1 tick above our current. That gives this market room to rally back here. If we go black to white candles, that would be a bull color rotation, black to white. Remember now, gang, we've just made new structure lows. So here, let's pull this down and let's identify our current market conditions. Let's tighten our chart up. This is your base DST thought process. Okay, so right here, the market made new structure low for the morning session. Then right here we pop and we actually make a new structure high. This high breaks above these previous swings right here. After that new structure high, we expect a higher low. Instead, we pull right back down. We retest these levels here. Lower high holds, and now here we go new structure low. Okay, so a little bit of a head fake. So this guy now comes back over here. After this new structure low, I want you to look left, gang, right there. Again, those of you that are new, write that down. Look left. Here's the previous swing high. So we're in a bear continuation until we trade above, close above this swing high right here. This gives us the opportunity to remain short the current position, trail the stops, and pick up those big directional moves when they happen. All right, NASDAQ's pulled back down into support. Let's see if we can now get this to NQ1214. Now that I've added it to my instrument list, it'll pull in our December contract for the NASI. We'll take a quick look at that. I don't think we looked at that on our higher time frame. Allah, yes, black tip and LS2 is absolutely correct. All right, gang, let's go back over here real quickly. Let me get your higher time frame in. Let's go look at our NASI again. Plenty of room to run. The other thing you can do, gang, that a lot of my clients do that's very helpful is take your DSR levels. You could either plot them on a higher time frame, or you can drop in horizontal lines as well. Okay? Either way. So here's the NASI. So again, this is the December contract. Big level right here. We want to be sellers 40.86 to 40.89. Only a 3-point window. Again, there was our short signal early this morning at 2:18. Right now we're in no man's land. We've pulled back off of that DSR. So my area of interest, 86 to 89 on the sell side, and 40.48 to 46 on the buy side. Now again, if this is the December contract, we weren't looking at this on September 10th. Had we been looking at this, we would have been buyers right down here. Now remember, it's the same signal that we got in real time Tuesday, Wednesday of this week. It was just at a different price point on the previous contract. Yeah, now let's just take another quick look at crude oil. Gain some perspective. Since we've made those new lows, you'll see right here, gang, on the 1,000 tick, again, we're kind of in no man's land. We do have this massive area right here, structure resistance at basically 91, 90, 92s. It makes total sense. 92 is an even number. So if we were to pull back down into 92s today real time, that would be a good extended target for any short trades. I doubt that that will happen. Yeah, I just keep that 1,000 tick down there for perspective. Again, I can easily come over here, change the instrument that I'm watching. Now let's go take a look here real quickly in crude oil. Okay, here's the color rotation. So again, this is a more aggressive trade. Let's go ahead, we'll move the stop. You can see we're still up 6 ticks in our sell. If I'm purely trading the color rotation, I need to reverse right here. This is a counter trend reversal. Okay, so I can also go, well, now we're getting ready to go back bearish. So I can go reverse. That'll put me long a 2 lot. Okay, then again, you can see the FibDots. If price rolls back over with trend, closes below here, then we're going to get black candles and I can go back into a reversal sell. The downside to this reversal, this color rotation stop and reverse signal, is obviously when the market moves a little more sideways, we don't get these nice 30 and 40 cent moves. It starts to tighten up, and instead we go from here, we get a 15, 18 cent move, then we roll back over and so on. So this is counter trend. I'm going to take target 1 more aggressively. Made 40 bucks. We covered our commission. We're still long a 1 lot. So if we did basically buy the lows and this guy continues the rally, we still get to participate. I'm going to pull the stop up right here. I know that a close below 92.55 right here, and my candles go back to bearish or black. Okay, so still net long. We're just looking at pure color rotation. Yeah, we've got this built out in the level 2 strat, just purely stop and reverse. And obviously we can modify the value of those FibDots. So we can tighten them so we get the color rotation more quickly. And we can widen them so we don't get it as quickly. And I'll show you that right there. Okay, so right here in crude oil, this is still the swing high, lower high. We have not made a new structure low yet. Okay, so in crude, as we look left right here, that's the current swing high, new structure low. This will be the lower high if we decline and make a new structure low. So basically the way I look at it, this new structure low pulls the swing high with it. All right, S&P declining here. Yeah, so we'll see. There are probably a lot of orders down here on the offer, protective stops, and people wanting to sell that momentum move. So a lot of times you'll see crude oil, gang, it'll go click, click, click pretty quickly. That's the one upside to the strategy, is that as soon as the criteria are met, it automatically places the order. The big Mo right here is big momentum. So you see I've got the master Mo set to a 200 period, and it's using right now the SMA, Joss. So it's a 200 period SMA. I built this so that we can use an exponential, whole moving, weighted, triple exponential, and so on. Okay, so it's a 200 period simple moving average. NASDAQ new lows, S&P new lows, S&P traders bottom middle. Extreme oversold conditions right now. We're not at any key levels. I've got points of interest down here, S&P, the December contract around 1978. Ah, there we go. Yeah, let me move my mini Russell over. All right, there we go. So mini Russell just got in a long signal. The Russell over here, we've got a turning point black tip buy. Now again, this is more aggressive based on where price is relative to. Actually, this isn't bad. I wouldn't mind this trade. I may have to give it a little more room right here, so I'm going to pull this stop down. So we've got one stop resting at 59.40, another stop resting at 59.30s. Notice that my profit target right here, traders, is at 63.50. Remember the basic rule: if current position is long and my profit target ends in a 5, then I round down to a 4. Right here, I want you to notice that in order to go get this profit target at 66.5, the market has to break above this swing high and trade through this structure support, which we'd anticipate would be resistance. So again, that's a very, very simple rule. It's easy to identify visually, so I can either manually pull this down right there. I'm reducing my target by about 6 ticks. But you can see here, now if we retest this high and this structure, my target 2 will be attained. So those are two very simple little modifications that the level 2 strategy allows for that a purely mechanical strategy would not. It allows us to recognize structure, look at the market, and again, just ask your basic questions. Where's price relative to? So right here, look left. These are DSR resistance zones. We'd anticipate this resistance would be support after broken. I don't have a current DSR level plotting. I do, however, have the structure right here. Yeah, that's exactly correct. So the question, if you wanted to cover part, we could do it one of two ways. Number one, I could take my limit order, left click, pull it down below price, left click, and it'd get filled at the next tick. Number two, I can take my trail stop, and I can trail my stop aggressively if I want to reduce the risk on half of the position. That's why when we set the strategy up, we set it up in a way that allows us to recognize those orders. So see right here? In the strategy, this shows you right here, actually my stops are inverted. This stop should be 22. My stop on the second contract, the trader, should be 24. My target on the first one is 18. My target on the second is 48. And then we have built-in stop trail right here. So we can say when price moves 15 ticks in my favor, or about 90% of my profit target, then move the stop 12 ticks in my favor. All right, so let's come over here. Quick update on our crude oil trade. Again, gang, I want you to note. So write down tendencies, those of you that are new, what tends to happen. From our buy right here, look at this pullback. It gave us ample opportunity to get in at a better price. Right here, from the entry, gave us opportunity to get in at a better price. Right here, from the short, it moved in our favor, came back to the value of the fib. We could have had a limit order resting there, get in at a better price. Look left right here, from the short signal here, we could have gotten in at a better price. Right here, if we buy market, we'd be long around 92.83. Right there, the 92.83 prints again. We could have gotten in at the same price and still participated. So these are the things that I watch in real time to see if I could enhance my entry. Okay, I'm going to trail my stop knowing that if we close below these blue dots right here, my bars will color black. So that'll be a bear color rotation, and that'll be a short entry. If the market continues the rally, we just stay long with it as long as those guys are white. Yeah, question, do you have to take both sides of the trade? You do not. So basically, I could just say, okay, if I only want to sell traders, or if I only want to trade with trend, as long as this big Mo is black, the master Mo right here, the 200 period SMA, as long as that guy's black, I can say I only want to sell black bars. If this guy's black and I get white, then no trade. Okay, so what would that look like? Let's come back in here, grab the text tool. So again, this if-then language is so critical. So we'd say if Master Mo, this is the big Mo, same thing, 200 SMA is black or bearish, then, so if this condition is present, then take this action. Only sell bear rotation. Period. Okay? So that's our criteria. Okay, so let's watch it right here. Again, we've pulled all the way back to test the blue. If we roll over, we'll not only get stopped out, but we'll reverse to short. Okay, now we just want to sell market. Okay, so now we're back short with the underlying trend. As soon as I put the position out, then I want to check my stops, check my targets. So my profit target is at 47 plus 15. My protective stop, I'll move this guy down. Well, we'll wait on that. I'll move it down to 81, but basically stops and targets are based on my ATM setup, which is right here. So I'm risking 22 to make 15 on the scalper. I'm risking 24, and then I just use a trail stop or a stop and reverse on the other one, the trader. Okay. All right, so back over here, right here we get the bear rotation while the master Mo is bearish, so we sell 2. So right here we're short 2. As example, we cover 1 plus 15, so that'd be 150 bucks. That means that from the short entry here at 03, we need to see 88s. And again, remember, you need one tick below the 88. So as soon as they print 87 right there, we should be filled. So right there, we're out on half, plus 150 in the bank, still short 1. Now, on the other one, we could have a static profit target. So let's just say that we choose 30 ticks, which would be $300. So from our sell signal at 93.02, we need to see 72s. As soon as we print here, there's plus 30. So this would be $300. So a 2-contract trade using a static target 1 at 15 ticks, a static target 2 at 30 ticks, would have just generated $450 per 2 contracts. The other thing I could do is I could then wait, say, okay, I'll take my first one at 150. Let me take the other one on a close above the FibDots, or in other words, when the candle turns white. So we would have remained short here. Soon as that goes white, we exit at the open of the next bar, so around 78. So this would have been plus 240. So you'll see this one event, the static target at 30 ticks outperformed the FibDot trail stop by $60. Yeah, so we look at those types of tendencies over and over and over. All right, let's take a quick look. Target 1 attained here. So mini Russell, $180 in the bank, still long the balance. Now, this is my chart trader chart where I manage the position. Volatility right here around the contract rollover. Now I want to go ahead and let's say that I want to come into 61.90s. That's 2 ticks above my entry, so that locks in $20, and that basically covers my commission for the position. Now, if I want to add the FibDots to this chart, this also can help me remove the emotion from trailing the stops. See the FibDots right here. Okay, so let's put them at 1618. We'll use black for bearish. We'll use chartreuse or lime green for bullish. And basically it's very, very simple. There's lawn green. So we say if we're short, the stops go above the black hash plus 2, 3, 4, 5 ticks. If we're long, stops go below the green hash, 2, 3, 4, 5 ticks. And that'll give you the visual right there. Okay, so let's expand this. So you can see right now we've got it set to 1618. Okay, so it's very close to price. And you can see that if I pulled it up right here, just a small pullback would take me out of the market. So let's come in here, let's double left click on the FibDots, and now let's modify. So this is a 1618 HMA. I can take it to 2.618. Now you can watch these FibDots will move away from price when I click OK. That gives the market more room for small retracements. Now you can see the FibDots remained above price for the majority of that down move. Allows us to stay in those trends longer. So that can provide visual. Gang, those of you that are relatively new traders, those of you that are struggling right now in your trading, you've got to find ways that you can remove the emotion. And one of those, obviously, is to automate or mechanize your thought process. That's what this if-then is designed to do. Up here, stop and reverse on crude oil. We just went from black to white. Now again, you can see crude oil starting to go sideways right here. So I'll show you a way that we can make some slight modifications to filter out some of this sideways stuff. So all the money we made in the last 3 trades, we can go 0 for 3 in a sideways channel right here and give it back. Yes, we want to be cautious of that. All right, take a look. My profit target is at 85. If I'm long and my target ends in a 5, I pull it down to 4. My protective stops well below our current swing, so I'll go 49 and 48 here. Reduce the exposure a little. And again, this is a counter trend buy. So I can say if it's counter to the underlying trend, then I want to reduce my size. All I do is take my limit order, pull it down here, okay, so we take a 2-tick loss, and now we can let the balance of the position run. All right, let's take a look here. So S&P rollover 89 to 82, about a 7-point range so far. Not a lot going on. We do have this area of interest down here, a key price point. So we've got 77, which is probably going to be close to the bid zone 1. So again, 88, 89s, I want to be a seller. And then right here, opportunity for an entry, 78. And then these swing lows down here. I love anything against the 74, 75. Joss asking about can these use? Yeah, these can be used on any time frame, gang. Doesn't matter. Any market, any time frame. All right, so there's our crude oil. So again, stuck like Chuck down here. We'll see if we can get a break back above and maybe a return to bullish momentum. So Joss right here, you can come in and grab the ruler. And as an example, here's my turning point black tip buy. So this can set up the signal. Then we take the first color rotation after we get this cluster 2. So again, remember, if then. If I get a turning point followed immediately by a black tip, while the master Mo is green or blue or bullish, then buy the next color rotation. So we'd get long there, and that was an 80 tick or $800 winner in crude oil. So we can use the same thought process in theory there as well. Now remember, if we wait for that color rotation to occur, it's going to take a while. See, the black tip turning point, if I just buy the next bar market, I'm long from 91.86. If I wait until I get the color rotation, it costs me 30 cents or $300 to wait for that additional confirm. But there will be times when I buy it right here, the market comes here, the bars never turn white. In other words, I never get that bull rotation. This guy rolls back over and I get stopped out. So again, that filter can be helpful. We just got to look at a sequence of events so we know if it's helping or hurting over the longer term. All right, here's the double top, double bottom indicator issuing a signal. So you can see this, gang, right here. Yesterday I taught on the basic DST signal, which is an SOS 3 or 4. So this is telling me right there's my base sell signal. There's the favorable excursion entry. So it's going to highlight the pattern for you, like you see here, and then tell you where to be a buyer or a seller. And this is the foundation of dynamic structure trading. Yeah, so next week we'll cover that day 1. Day 2 we'll look at the favorable excursion, and then day 3 we'll look at the 2618. It's a progression. Really cool little trade. And the nice part, again, you can do it any charting package that offers relative strength is going to work for you. Okay, gang, now we've gone 2 stop and reverses here inside of a channel in crude oil. So on crude, if we get stopped out of this next one, then I'm going to wait till we make new structure highs or new structure lows. Okay, stopped out on the trail on the Russell, all flat there. Strategy running top left, and then we managed it on the bottom chart. Now we'll wait for the next qualified trade.
There's a difference when you trade with Fidelity. One you won't find anywhere else. 1-second trade execution.
Yeah, no real reaction to consumer sentiment. So that number is out. So here's what I do. I come in here and I say, okay, let's grab the drawing tool ruler. And right here, right off the morning, if I bottom here, what was the highest high before I got a color rotation? So you can see right there we had an 18 tick move, so we would have easily gotten a 10 tick target, a 15 tick target. From the short entry right here until the next color rotation, we got 26 ticks. So I would have made 10, 15, 18. From the color rotation here, our highest high was 10 ticks. So I would not give myself a 10 tick target. We would, however, say, if I am long and the market moves 10 ticks in my favor, then move my stop to break even. So I would have been stopped out here, break even. Color rotation black, so let's sell them right here. Okay, the lowest low in the move was 17 ticks. I got my 10 tick target, I got a 15 tick target. I would not have hit my 18. Now you see here from the color rotation, we literally only get 5 ticks. Color rotation. Yeah, and then you can, that's correct. Then you can look at the with trend and counter trend. So if we only traded with trend, there would be our first sell, nice winner. Our second sell, nice winner. And then this one right here would have been a loss. And this short right here looks like we're moving down to what probably would have been a winner. All right, gang. ClusterTrader, long entries. So I'm at 59. I want to go 890 and 880 on my protective stops. Again, you see that we're oversold, lower high, bullish divergence, slightly lower lows on the day. Market can rally, retest these swing highs, take out my target 1. I'm going to again pull this down to 590. Yeah, it looks like these indexes are going to roll over. And again, both of these trades on the ClusterTrader Russell, we typically shut it off on Fridays, but both of these are counter trend trades. Yeah, now Kevin asking a great question. So how do you recognize bid zone or sell zone? So this is my ClusterTrader. Okay. So I'm sorry, not the ClusterTrader. Right here, range trader. Okay, so the range trader is what produces these bid zones. So it's a dynamic trading strategy. We typically buy bid zone 2 and sell offer zone 2. It's just a base signal. Number 2, once we break below support right here, we anticipate a minimum move to the bid zone 1. And then once we break bid zone 1 right here, we expect the minimum move to bid zone 2. Yeah, this is a different strategy, though, than what we've been watching here on the stop and reverse. Slightly different signals. You in there, Big Rod? Okay, my bud. Do you want any stocks you want to take a look at? I'm going to pull over our equities real quickly. We'll update the, we bought the SPY puts the other day, gang, as we discussed. Here we're coming in with our charts. So you can see right here, we did get a pop yesterday and a move against us. And now the SPY rolling back over. I don't know if you can pull those options up and see where we're trading. Okay, so we're down about 9 cents on the option from the 165 entry. If we break below, oh, I'm sorry, up, yeah. So we're up slightly. Now this will be a really interesting close. Let's take a look at the weeklies. So first and foremost, RSI is overbought. And when you go through this and literally type this in, this has an impact on your psychology. right? This is neuro-associative training. So first I identify that area visually. I have to see it. Then I say SOS1, sell. That's the RSI overbought. Now I've employed the kinesthetic. I have to physically type it in. So RSI is overbought, SOS1. Where's the market relative to? I'm at a support level. Look left, previous structure. So I'm at structure. This is SOS2. On top of that, I get a turning point black tip. So this is a 2-bar cluster. That's SOS3. Now, that's a short entry with trend. RSI, one technical indicator, overbought. Where's the market relative to? 2-bar cluster. Short entry with trend right there. Yeah, so I'll go ahead and put on a 2-lot. We're a little bit better right there. I'll go tighter stops, 91, 92s. 57 is fine, and then we'll just tuck this guy away. I'd anticipate a move down here and then a retest of bid zone 2. Again, we're battling this 1,000 tick chart right here. Let me pull this back over. And on the 1,000 tick, you can see we stopped right at our big Mo. That's right. So Lee asking, with options, what we do is we risk the value of the option or whatever our purchase price was. So for example, the spider calls. So that basically is a play where I'll risk 50% to 100% of the price that I paid for the options. And then we look for, obviously, a massive move in that particular case. And then when we do our performance, we always do ROR, which is return on risk. So I risk 10,000 on that trade. If we make 10,000, then that'll be 100% return on risk. Not on my account size, just on the risk.